Good afternoon, everyone, and welcome to this year's virtual Bermuda Tech Summit. My name is Susan Pateras, and I'm the Deputy Chair of the Bermuda Business Development Agency. And I want to thank you for joining us today for what I know will be a very interactive session and discussion on the underwriter of the future. As a former underwriter myself, you can imagine how excited I am about this topic. I've had the privilege to work in this business for over 25 years as a broker, as an underwriter, and as a chief operating officer of a major reinsurance and insurance specialty lines company. And I've always looked to the future, not only for our domicile here in Bermuda, but also our industry as a whole. And I've personally seen the rate of change continue to escalate in speed, along with scope and shifting market and customer demands, which present real challenges to our business. But I believe these challenges create great new opportunities. So today, with this amazing panel of thought leaders who've all adapted new strategic approaches to underwriting and who deliver capital to risk, we plan to explore how each of them are responding in unique ways to evolving customer needs, demands for innovation, new solutions, and improved customer service. And also why Bermuda, in their view, has been the proven domicile with globally significant insurance and reinsurance capital, with a forward-thinking regulator, in my opinion, and has been their choice to either beta test new products and services or roll out their new business models. So joining me for this critical conversation is my team of experts: James Birch, Development Director of Key Insurance; Adrian Jones, Managing Director, HSCM Capital Management Limited; Fred Kipperman, Managing Director of Archipelago; and Abhijeet Kuray, Chief Technology Officer at Mosaic. So to start out, Adrian, I've heard you say before that insurance is a game of niches and inches. So if I could start with you, how does HSCM look at change and growth within the insurance sector? And what are your thoughts on how we need to shift and pivot to get there?
Yeah, thank you very much for having me, Susan, and thank you to the BDA as well. We're a proud Bermuda domiciled organization and always happy to be connected with people on the island. If you take a step back for a minute to set the stage, there have been three major changes that have happened in the business in the last 10 years. A dramatic influx of people, an influx of technology, and an influx of capital. And if we focus on just the technology for the time being, if you think about 10 years ago, think about technologies like AI and ML. AI was playing Jeopardy and actually doing very well. Since then, the power of AI has gone up by 50x. The amount of data has gone up dramatically. So it used to be that, Google Earth was kind of cool and you could look at your house. Well, now you can get fixed wing imagery of an entire continent done multiple times a year at this sort of granularity. That becomes incredibly powerful when you combine it with data technology, combine it with much faster, cheaper internet. It's still getting cheaper. And when you combine it with people who are saying we can do things differently and we can do them better. And so if you just look at property risk, for example, the ability to understand secondary modifiers on property, for example, is far better than it ever was. And that is allowing people to be far more granular in their risk selection as well as in their risk aggregation. And I think that's just one example of the power of the changes that we've seen.
Thank you so much for that. James, I know that at Key, you have a very non-traditional approach to underwriting, including how you use capital and marry that with tech-enabled data versus what I consider really the traditional underwriter kind of face-to-face model. So could you share with us what underwriting looks like for you and how you redefine the definition of underwriting?
Yeah, sure. And I'll try to kind of pick up on Adrian's theme around kind of taking more a data-led model and approach. But before I do that, I'll try and explain a little bit around, for those that don't know out there, what Key is. So Key is kind of our tagline, I suppose, is that we're the first fully digital and algorithmically driven Lloyd's of London syndicate, effectively meaning that we offer instant capacity, accessible anytime, anywhere. We were launched in 2020 after raising 500 million from Blackstone with the aim of effectively redefining the commercial insurance market and taking an algorithmically driven approach to underwriting. And bluntly, really what we're trying to do is do what quant-based hedge funds did to the capital markets in the 1990s. So simply put, Key leverages, I suppose, like an algorithmically driven approach to underwriting, evaluating risk in real time, to automatically provide a quote to brokers instantly through our platform. This is compared to the kind of manual underwriting process, which can take anywhere up to kind of a week to quote to bind in terms of time. Whereas Key is kind of do it instantaneously, so it's a matter of seconds really. Key uses its algorithm to generate a line size, and really that's based off the individual kind of risk data and evaluation of that data, depending on kind of weightings, depending on what type of classes and things like that. It's available 24/7 via laptop, mobile. Obviously, brokers typically, or sorry, underwriters typically working 9 to 5 and don't work on weekends. Key's always online, it's always available, and it always says yes. That's kind of part of our proposition, so we never decline a risk. And I suppose algorithmic trading is, to now try and kind of properly answer your question, algorithmic trading is a relatively new concept in insurance. I think it's something that's been successfully applied in other financial markets, and I mentioned capital markets when I opened, but really it's a huge opportunity for our marketplace, and it creates data-driven insurers that deeply understand risk and what their exposures are, with a core which is really what I suppose a core capability should be for an insurance market in the first place. Allows us to kind of automatically analyze risk, to offer more personalized products, and in theory, serve a broader set of customers and ultimately in a matter of milliseconds. But I think that the key value lies in a deeper actuarial understanding of the risk through the data you've provided, but also really what Key's trying to do is leverage the algorithms not to drive out performance on the underwriting side, but in the short term, the data-led model creates, immediate expense benefits, increased speed to quote, and increased certainty for the client, as well as reduced kind of human bias in the decisions that we're making. So that's our approach at Key. It may not be for everyone, but that's what we're trying to do.
No, I love it. Thank you so much. And you mentioned client quite a few times as well. So again, this isn't about just solving industry problems, but really talking about the customer along the journey. Abhijeet, in your new role at Mosaic, I mean, certainly you and I have shared the trenches many times as part of this conversation and evolution, but Mosaic has made huge strides in a very short period of time since its launch. Can you share how you've achieved success and redefine the underwriting approach as well, combining tech and automation? And I know you have a specific differentiator around analysis and triage alongside kind of the human interaction with underwriting.
Yeah, sure. Thank you, Susan and NBDA for arranging this panel. So I guess as a quick introduction to Mosaic, we are a startup. We only launched in February of this year, and we are proud to be Bermuda based as well. We picked 1609 as our Lloyd's syndicate number in recognition of that. We have an underwriting model of leveraging our syndicate capacity and distributing it across a structure of service companies in the US, UK, Bermuda, and Asia. And right now we're underwriting 6 lines. We're doing transactional liability, professional liability, cyber, political violence, political risk, and financial institutions. Now, to answer your question, Susan, our approach to underwriting is very much driven by technology. With the benefit of having a clean slate of no legacy, our technology strategy is designed to make our underwriters what we call hyper efficient, right? So they have real-time analytics to make pricing decisions, as well as automation to offload a variety of labor-intensive tasks. We are really focusing on 3 key technology pillars, right? So we are cloud native, we have automation everywhere, and we're data first. So what does cloud native mean for us is all our applications and assets that we use are cloud-based. We have partnered with Amazon AWS as our primary cloud provider. We have 0 physical footprint, and that just provides us with unlimited compute capacity. And that is the driver of our innovation. In the second pillar of automating everything, we're building incrementally. We have automated every basic data entry action using robotics, right? So actions like entering data in compliance applications or feeding data into aggregation models. Those are just basic things we have automated. The next thing we're doing is we are using natural language processing and artificial intelligence for slightly more complex actions, right? Such as submissions triage or sanctions checking or document creation. And lastly, the third pillar of our strategy is our data first thought process, right? So we have built a data lake to consume data from all our source systems And then we're presenting it to the underwriters using data dashboards from Amazon. Right? We're further extending this capability by building out our API gateways so that we can interact directly with our brokers and our other partners. And the API gateway has an underlying blockchain architecture that provides essentially real-time visibility to our trusted partners, whether it's reinsurers or capital providers. And all this is aligned. We are very much working in lockstep with Lloyd's Blueprint 2.0 and the Court Standard. So I guess in closing, I think the recipe for success, and this is probably a common theme that we all share, is really our digital operating model, which is a combination of our cutting edge technology and outstanding underwriting talent.
Thank you so much for that. I mean, this is really touching on the convergence of what I call underwriting as a person and people and kind of the traditional model and the use of technology and data. So Fred, if I could ask you, how does your company achieve this? And really, what is your view on why this provides value and how it provides value to buyers and customers? And what's the threat of not innovating or addressing this as part of our industry?
Well, first, thank you. It's a real honor to be on such an illustrious panel and such an important topic. And I just want to take a second to commend each of the other panelists, because I think what they're doing is really all on the cutting edge. And what Archipelago sees is an opportunity to think about more standardization of data, to leverage AI in a way that allows for, one great example is what Adrian mentioned around secondary modifiers, is that the sophistication of models is everybody can agree on, but we all know the garbage in, garbage out principle. And one way that AI and technology can make a big difference that we're doing is we're extracting data from unstructured documents and converting it into a language that the insurance models can appreciate. And in a lot of cases, property owners, thinking about commercial property, they're doing a great job on the quality of their assets and stewardship, but they're not communicating the quality of the assets and stewardship in a way that they can accurately be represented in CAT models and attritional models. And it's not because they don't have the data, it's because they don't know how to structure that data and present the data to the markets. And that's one niche that we're filling in and super important. Thinking about a more standardized approach to commercial property insurance data is another thing that we're doing. And then creating a way that is wiring together the source documents to the data in a way that makes it more reliable and evidenced is a third way that we're helping to promote a more informed market. But where's the risk that you mentioned? And we recently commissioned a study with Advisin. We surveyed 206 large property insurance programs. The risk managers were generous in their response, but they were also candid. And the feedback that we received through this study with Advisin was that the markets are not transparent. There is difficulty in understanding how risk is being priced and selected. And without the opportunity for a transparent market in commercial insurance, I think the industry is missing an opportunity to be transformational and to be able to send the signal out into the market about what's risky, what's resilient, what's safe. And without that transparency, I think that that's where the risk is that it's hard for customers to see how they're being assessed, how they can get better. And the industry is essentially missing an opportunity to be able to be transformational and sharing how it's assessing that risk and then converting that into better corporate behavior. And so I think that's a good way to think about what we're doing and how we want to be part of a more transparent and transformational insurance market.
Thank you for sharing that. James, that key lead underwriters structure data. They don't negotiate as we traditionally seen in the past. And so kind of talking or bringing Fred's comment around transparency with this non-traditional model, how are you recruiting new underwriting talent, and what's your view kind of on the institutional underwriting knowledge of the past and how you bring that transparency perhaps forward?
Interesting question. I think Key's set up a little bit differently than a typical insurance business. We're not heavy on the underwriting side. We have 45 employees, of which 4 of them are portfolio underwriters, and their kind of role is quite different actually from what I think a traditional kind of technical underwriter is. It's more of kind of a portfolio management and kind of sales and business development role, kind of working with brokers to kind of like fill the pipeline. Another thing to note with Key is that it's a follow-only syndicate. So we're not setting the price or terms of the risk. Those are set by the lead market. So really, by the time it comes to Key, the way that we provide transparency to the market and to the broker is by always saying yes, we never decline. We make it very clear what's within our risk appetite. So from a line size perspective, it's easy for a broker to understand when they're going to get a 10% line versus a 20% line on like one type of business compared to another. So I think consistency is key there. Excuse pun. Trying to be consistent with our offering to brokers, trying not to overcomplicate things, making it not feel like Key is a black box, and they're just trying to be transparent with our line sizes to them, so they can slightly try and like play with the dials and the inputs a little bit and get maybe a smaller or bigger line size from Key.
I think one thing that's neat about that approach is one thing that's happened in higher education in the United States. There's a president of Arizona State University. His name's Michael Crow, and he sought to make higher ed inclusive rather than exclusive. He wanted it defined by the number of people who could be educated rather than the people who weren't let in. And I feel like what Key is doing is that they're on the leading edge of making insurance more inclusive and making it available. And that I think that when companies like Key succeed, that we'll have a more scale, and that insurance, in fact, will be the most important industry in the economy, and that it'll play out in ways where capacity isn't an issue. It's about pricing and matching risk with the right markets, and I think that's super cool.
Yeah, kind words, Fred. Thank you. But to kind of add to that, I think one of the big benefits of algorithmic underwriting and kind of algorithmic trading within insurance is the expense advantage to the carrier, right? So that expense advantage can be then passed back down the transaction to the client. So ultimately, in theory, you should get a price advantage to the client if everyone is taking more of a data-led approach to their underwriting. Everyone can find returns on their own expense base, and then ultimately pass that back to the client as well. To bring that to life, I mentioned we've got kind of 4 portfolio underwriters at Key. This year we're on track to write over $400 million of gross written premium with 3 months left of the year. So you can work out per underwriter, roughly it's 100 million plus of gross written premium each are doing, compared to the typical Lloyd's underwriter is about 5-6 times less than that. So it allows you to be a lot more efficient with your deployment of capital, and then you find gains, and then you can pass those back to the client over time. And then we think that also having that expense advantage, particularly within the Lloyd's market, will allow the Lloyd's market to actually grow and, in theory, be a bit more competitive with some of the local markets as well. But that we're not in control of that, so hopefully we can be a part of it, and Mosaic can as well.
Yeah, Adrian, Abhijeet, I guess any comments there around talent or the new underwriter of the future, how you're recruiting?
Yeah, from a Mosaic perspective, it's a fair mix of underwriting talent and technology. We do see the underwriter as a crucial role. So certainly in our recruiting, you'll see that we're focused on getting the right underwriting talent recruited in Mosaic as well. And it also depends on a little bit on the business model, like James said, just depending on the lines that we write, as well as the lead positions that we're taking. There is pricing decisions and actuarial decisions that are inherent to Mosaic, and that's a part of our secret sauce. So that's why the operating model that we have comes together with digital and the underwriters sort of together as one force.
Yeah, if I look at the companies that we've seen, we see a number of companies in insurtech who think of underwriting very differently and therefore underwriters very differently. Underwriters are people who work with data scientists to set up models that allow straight through processing of risk, you know, a little bit like what James and Fred have been discussing. And that provides not just transparency, because actually transparency in personal lines and small commercial is less of a concern than speed and accuracy of quotes. So if you can quote something quickly and accurately with only a handful of questions, and you can do that in a straight through manner, then you have an advantage inherently in dealing with customers compared to folks who are slower, who require more manual processes, et cetera, provided that your loss ratio is not significantly higher. That has been one of the challenges that some companies have experienced, but others have actually done very well at that regard. And in fact, some companies are finding that in fact, the algorithmically driven individual risk underwriting for smaller risks is actually more effective than the humans. And so there is no longer, you know, armies of people relatively poorly paid who are sitting, you know, just going through papers all day, every day, and making decisions on risk. It's actually becoming much more sophisticated, and I think that's ultimately good for everybody involved, including employees, including customers and intermediaries.
Yeah, absolutely agree with that. Abhijeet, to get us there, right, that's part of the evolution. I know that you've been working, and certainly the Mosaic proposition means that the operations side across the value chain has had to shift to encompass and support this new operating model. Can you talk about how you've done that specifically with joint ventures and maybe some of your other projects that you've talked about?
Sure, yeah, no, that's a great question. So the big shift for us on the operations side is really the focus on data and automation, and very much on the lines of what Adrian said. Before we could do some labor arbitrage and reduce some expense ratios based on just getting an army of people and doing some data entry and such. But right now, really our focus is automation, and not just automation, right? But intelligent automation, so that we get the speed, accuracy, and the efficiency at levels we have not seen in the past, right? Democratization of data and instant powerful data visualization. Those are what is game changing for us at Mosaic. We're focused a lot on getting the data right, so that data is used to making the underwriting decisions. It's not a week old or a day old or even just basically stale. It's available as it gets entered in the front end systems, right? So it's in real time as it happens. And also the visualization functionality is important, because just having lots and lots of data sets to the underwriters is honestly, it's overwhelming, and it may even slow down the risk analysis process. So synthesizing the data and presenting it to the underwriters in a consumable format for quick decision making, now that's the trick, right? So given our technology focus, we do consider ourselves an insurtech in addition to being a carrier. But to leapfrog the build out of our digital operating model, we have partnered with like-minded innovators such as DXC and RPC Taiki. DXC provides us with their market leading assured digital platform, which architecturally aligned really well with Mosaic's ID strategy, right? So the DXC platform, it's cloud-based, it's modular, it's API ready, it's built on a single standardized data model, it's in line with principles of the Lloyd's blueprint. And of course, it's backed by DXC's knowledgeable workforce, right? They've been around servicing the London market for many years. So in that sense, with DXC, we had good synergies of our combined thought process to build our insurtech operating model. We're also seeing this resonate well, Susan, across the value chain. So some of our key broker partners are actually working closely with us to build APIs and integration, so that way we can process submissions without the traditional manual entry, right? So we're getting rid of everything that was basic and traditional, and our underwriters are focusing only on really the underwriting tasks. So any double keying, et cetera, that's something that we're working with our brokers on. We're also partnering with some of our third-party capital providers to expose data dashboards so that they can monitor where their capital is participating and what exposures they have and such. So really on the lines of what Fred said before on transparency. For us, the future is all about collaboration, transparency, connecting through APIs and blockchains, and data visibility.
Thank you for that. I mean, I think it's clear in everyone's comments that the use of data consumption, and technology is really evolving to create a more or superior underwriting performance, but also improve results. And what I love is speed to market. And with that as a backdrop, I mean, to me, that's in Bermuda's DNA. So Adrian, I would like to start with you, but feel free anyone to chime in. How has Bermuda, in your opinion, reinvented itself? How does it continue to remain relevant and punch above its weight and outperform other domiciles?
Yeah, as I said at the beginning, we've always been supportive of Bermuda. It is our corporate headquarters as well for HSCM. Bermuda has, I think, a very strong combination of regulation, which is very forward-looking and very encouraging of innovation, which is different than one sees in other domiciles. I think Bermuda has a very good pool of talent, particularly around aggregations of risk, which increasingly is really the challenge that people are having to deal with. I think that Bermuda has the technology chops as well, in terms of great technology firms being located on the island, so that technology, people, regulation, and capital, of course. Bermuda is a great place to raise money. It's not a great place to hide money. So it really has all of the ingredients that I think are necessary for a very successful insurance domicile.
Thank you for that. I couldn't agree more. Anyone else, any quick comments?
Yeah, one thing just to add to Aidan's point, and Abhijeet mentioned it earlier, right? When it comes to building a technology first or data-driven business, you need tech talent. And actually, I think in today's current working environment, that's not a barrier to entry if you're based in Bermuda as a domicile either, because ultimately, particularly tech talent comparative to underwriting talent or other types of talent is remote and wants remote. So you shouldn't think of that you have to base yourself in Silicon Valley or London or Singapore or one of the other tech hubs to get access to tech talent. If anything, it's cheaper to access kind of offshore resource anyway, and that resource is as effective as anyone else. So
I'd say one other part of the secret sauce of Bermuda is a forward-looking perspective. I think that we've all been talking about data and the importance of data and its role in modeling. But I think we're living in a world where what's happened previously and what's been documented in claims is less and less relevant to the underwriter of the future because the world's changing so fast. We're harnessing knowledge and insights in such a new way that I think that the perspective of being able to be open to forward-looking insights into underwriting is another part of what makes Bermuda unique, in my opinion.
Yeah, I think I'll add to what you said, Fred, which is Bermuda has always been front and center for Mosaic. Our co-CEOs reside in Bermuda. What we found attractive about Bermuda, in addition to everything that everybody has already said, is really the collaboration aspect. Everything is accessible in Bermuda for the partnerships that we seek to make, whether it's on the capital side or the technology side or really reinsurance side. And that really is the value that we see in Bermuda. We were actually over there for some board meetings last week. And within a couple of days, we already established so many contacts just because everybody that is in that ecosystem is around and accessible.
Yes, thank you all for that. I agree 100% being part of this ecosystem. And I just want to thank you for your time. Thank everyone for joining us. If you have any questions or want to chat further with the panel on the unique strategies they have, their views on the changing landscape, specifically with respects to underwriting of the future, you can join us to continue the conversation. And we're here to answer any of your questions in the sessions room where panelists will be available to talk to you live. And for those of you who are interested in keeping up with developments in Bermuda and our marketplace, or have any other questions, I encourage you to visit www.bda.bm or contact myself or anyone on the team directly to discuss how Bermuda can solve any of your business needs, because obviously we are open for business. So thank you all. Stay safe. Have a good day.